it's playing with fire in a lot of ways. And, I can understand, and I think the system can take short-term disruptions, right? If it's 6 months or if it's 3 months, can't take it for 4 years. You can't take it. Maybe you can't even take it for 2 years. Who knows?
Okay, so to move along, every day we see that our President Donald Trump is trying to fire Jerome Powell from the Federal Reserve, and/or today's Wall Street Journal, he's saying, I'm going to fire him. No, I'm not going to fire him. It'd be too complicated. No, I'm a conservative. I'm not going to fire him. And it looks to me like he's pressuring Mr. Powell to resign, although his term does not come up until May of 2026. What's your take on the head of the Federal Reserve and rates up, rates down, and how they are a push or a pull or an effect on our national or international economy here in the U.S.?
Personal politics aside, the what's going on? I mean, it's no different than the way this president treats a lot of people when they do things that he doesn't want them to do. But the head of the Federal Reserve has got to remain a non-partisan, non-political position, because their charge is two things, right? Fight inflation and full employment. It's not, support a president. It's not, make your steel imports, more expensive, whatever.
It's complicated and a hot subject.
But it's also a longer term view. It's one that should not be subject to any federal, any pressure.
They say politics. Yeah.
Yeah. So, that's one thing. The other thing, just from a macro level, the issue, the United States dollar is regarded as the best in the world, right? It's the store value. It's the currency of record for countries around the world. If you're in, Brazil and you take a taxi cab and you don't have any reals or whatever the Brazilian currency is, you can pay with a dollar, and they're happy to take it. It's the world's currency. And why is that? It's not because it's backed up by silver or gold or real estate that we own. It's backed up by the full faith and credit of the United States. And if the United States is going back and forth on trade wars with its allies, if it's pressuring its, chairman of the Fed to reduce interest rates at a time where there's still inflation and there's still full employment, interest rates are the cost of money, right? So if the real interest rates in the United States are higher than other countries, that means our currency is worth more. And, the actions, over the last 6 months, I don't think that we've seen the full implications, because the full implications can be, very corrosive to our underlying, the strength of our currency and our underlying economy. I mean, if countries over the world say, we don't know what we can count on with this president, with the United States, maybe we need to look at the yuan, Chinese yuan as our currency of record, or the, Russian ruble, or Indian, whatever it is in India. It's playing with fire in a lot of ways, and I can understand, and I think the system can take short-term disruptions, right? If it's 6 months or if it's 3 months, can't take it for 4 years. You can't take it. Maybe you can't even take it for 2 years. Who knows? So I would hope and pray. Business, high interest rates, low interest rates. What business wants to know is what the future holds. It wants to be able to plan. If rates are going to stay at the current level, great. Just tell me that, and I can plan for what's going to happen a year or 2 years in the future. If it's going to be, hey, I have no idea, it's going to be this, it's going to
hold on to your dough, you keep your powder dry.
It's going to stifle investment. It's going to, businesses are going to make wrong decisions, and it's going to erode confidence in the U.S. dollar. So I don't understand the long game. I don't know why it's being done. I can understand, short-term trade agreements to try to kind of push for a more equitable, tariff solution from some of our partners. But in the end, these are people that have fought and died with us. I mean, Canada, England, there's never been a question. When we needed help, they've stepped up with us. To treat them like they're outsiders or they're somehow against us it feels wrong, and I hope it stops.
Okay, personal politics aside, and after your super eloquent and educated answer, what about the biggest bankers of the money centers, as you were calling them, saying that the another giant problem here is that the government, and it's come before Trump, have got us trillions and trillions into debt, and it's weakening the value of our dollar. We may not become or stay as the leading money system of cash around the world because the debt is unbelievable, and President Trump is arguing that it's costing the government too much to pay back their borrowing. Any kind of comment on that?
I think even bipartisan people have said that the big, beautiful bomb of a bill, whatever it was, is going to add $3 trillion to the national debt. So, the last president to balance the budget and have it run a surplus was who?
Bill Clinton.
William Jefferson Clinton, Democrat. So, it's been a long time, we spend a lot of time talking about tax cuts and talking about entitlement programs, but the tax, add them up, you're digging yourself deeper and deeper into a hole. So
it appears Trump is trying to buy us out of debt. He wants to get the growth way up so he can pay the debt down. Is that any kind of strategy, you think?
Well, I guess that's, part of that discussion on the reduction in interest rates, right? If you can reduce the interest rate, you reduce the cost of money. If you reduce the cost of money, you reduce the cost of repaying your debt. But if your, one reduced interest rates is by its nature inflationary, so suddenly everything else costs more. Maybe if your money costs less than two. If you have two policies, right? You have your monetary policy, which is your supply of money, and you have your fiscal policy, which is your tax policy. And if both of those are expansionary, then you've got a real issue with ever balancing your books. So, the other avenue is the current account, right? Your trade deficit with various countries, because that's basically your currency flowing out to buy goods that are imported. So,
and Trump's hoping they'll buy more from us.
It's
a hope.
It's a hope. So, the past, economic theory have been more based on, specialization and Adam Smith, the invisible hand of the market, and each country would do what it's best at, and by doing that, you would optimize the economic output and kind of balance your scales. And we have gone into more of an isolationist view. I mean, I don't see any other way to describe it. And, for America First sounds great. It's a wonderful slogan. But if we're making and doing everything here, it can't possibly, just according to economics, be the most efficient. We can't be the most efficient at everything. So by trying to reshore everything, I don't know that it's a successful or winning strategy.
And I'm not sure he's trying to reshore everything. I think he's trying to reshore the kind of businesses that sell a lot here and pay good wages. I know Waterbury and their economic development, when you bring something down to City Hall to the economic development director, Joseph McGraw, first thing he says is, how many jobs does it have? Because we have a population of 104,000 plus all the circulation, and we need people working so that everybody's behaving themselves and making money and trying to buy a house and get ahead. Okay, so Chad, introduce yourself once more, because this may get chopped up into a couple of shows.
As Chad Stewart, I am a commercial lender with Ives Bank, team leader, first vice president. I focus mainly on businesses and commercial real estate lending down in the southern half of the state, so from Greenwich all the way to New Haven, but we'll look at opportunities anywhere. I like to tell my clients and potential clients, if you have a need or if you have something you want to talk about, call me. If I can't do it, I will find somebody that can. And best way to get me is always on my cell, 203-260-6181, or via my email, which is the letter C, Stewart, Stewart, at ivesbank.com.
I'm very appreciative of you coming into Strike Zone Studios today. I'm Tom Hill, CCIMSIOR. Those are premier industry designations. I'm a commercial real estate broker and advisor. Same. If you want to talk about a problem you have I can solve, or you need a building, or you want to sell a building, I would be happy to hear from you. There's no charge to talk about what your opportunity or your problem is. Website's tomhill.com, and all these podcasts are posted on tomhillradio.com.
And if I may, would just throw my endorsement to Tom that Tom is relentless. He is ubiquitous. He is inevitable. You know, if you have a piece of real estate that you choose to list with Tom, he will be relentless in finding the right tenant for you. And if you have a piece that you want to sell, he will be equally as relentless in that as well. So I think Tom Hill would be a great choice as your commercial broker, and I heartily endorse him and his efforts.
Thank you. And if we can't do it just like Chad, we know who can. So that's the answer. Okay, so you just talked about the invisible hand of money. That was Adam Smith. Did I say that right?
The invisible hand of the market, yes.
Okay. And Adam Smith...
I was a UConn economics, so the dismal science. So that's where my objectivity comes from.
Is Adam Smith an easy read?
No.
Okay.
Not in the least.
But you're easy to listen to. So let's just talk a little bit about these three items on education. Adam Smith, you made me think of that. Banker colleges, where do you get your continuing education like we as brokers have to get? And specialty training, and maybe start with, what do you read every day, or where do you get your news? Because you're really up on current events based on this interview today.
Oh, thank you. I pay attention to, New York Times as well as, local papers and through social media and stuff like that. But if somebody is interested in banking as a career, the ABA, the Stonier School of banking, is the premier school for it's for people that are already in banking to kind of take them to the next level.
Got it.
And I believe it's at the University of Pennsylvania. So it's it's a great program, and I went through it just about 30 years ago. And Pat Kelly over at Ives Bank is a graduate, and I still got friends that teach at it. So it's a great experience for somebody that is maybe looking to transition from like a teller job to a credit job or something like that. There's local Bankers Association classes that can help you make that transition, and they're out there. One of the things that is a greatly underlooked resource in the community is something called SCORE, Service.
Oh, yes.
Corps of Retired Executives. And SCORE, it's kind of started out as an advisory. Like if you wanted to be an entrepreneur, they would, advise you how to start your business maybe, or if you were in business for a couple of years, maybe they'd tell you how to grow it or whatever. SCORE right now has, a bunch of different programs that they care, like how to use AI in your business, how to, shop for insurance, different stuff that are far more applicable. They're not esoteric or imaginative. They're really hands-on business classes. So I would strongly encourage anybody in business, but if you're a banker, I sign up for them and I listen to them. The other one is the SBA. The SBA is a tremendous resource for bankers and borrowers alike. The SBA, Small Business Administration, kind of became a household name during the pandemic with the PPP loans, which weren't really loans. They were grants. They were forgiven. But they also did these EIDL loans, disaster recovery loans. They'll do in FEMA disaster zones. They'll offer loans, but SBA also has a series of on Tuesday, I think it's the second or third Tuesday of the month, they'll do a informative seminar for lenders, and it could be on business valuation, and it could be on, like I said, insurances or underwriting. Could be on the SOP, which is the standard operating procedure for the SBA, and how to qualify businesses for SBA loans. And SBA loan is kind of a misnomer, because the SBA, other than the PPP and the EIDL, isn't a direct lender. They don't lend. They go through banks. Banks use the SBA to enhance a credit by providing a partial guarantee. It could be anywhere from 50 to 85% of the loan gets guaranteed by the SBA, but that allows the bank to be a little more creative with its financial solution.
And that's only for owner-occupiers for the most part. So the SB, what is it, the 504 is for owner-occupiers?
504 is a commercial mortgage program for owner-occupied properties, yes.
And if you're interested in this subject, if you look through TomHillRadio.com, we had Ralph Richard on, who was a longtime officer of the Savings Bank of Danbury, and he went the SBA route for the rest of his career. There's a nice special on that, TomHillRadio.com. And CIC, you guys use those.
Presently working with Ralph on a great deal. So for a brand name company here in Connecticut, so it's a great resource. CIC in general, Ralph Richard in particular.
Yeah, good people. Okay, so moving along, got a few more little things to go here. Please stay with us, whether it's one show or two. Let's talk about bank boards, and how do bank boards work and why? And I know you have a big board. I think Gary Hawley's your chairman. Your president, Martin Morgado, has to report to them, and there's probably 30 people on the board or something along those lines. Why do banks have them, and how do these board of directors work in running the bank or trying to advise, I guess?
Sure. So Ives Bank is a mutual bank, so it's not really owned by shareholders or investors or even, individuals that might, make it a private bank. It's owned by depositors, and there's different levels of its boards, and quite frankly, some of them I'm not sure what the difference is. But if we drill down, there's something called an advisory board. An advisory board is usually based with well-connected individuals in a particular geography that will provide with leadership and guidance. Who's doing what in this, say, Waterbury.
Yeah, Mark would say, "What do you think of this?"
Yes. So that's an advisory board member. We have something called incorporators, which is kind of the next step in the evolution, and then there's the board of directors, which provides not only leadership and guidance and market intel, but the directors also provide what's called directors loan committee, and the full board, where deals over a certain dollar amount get reviewed and approved by them. So there's lots of responsibilities to being a director of a bank.
So when you decide to lend, let's say, $1.5 million to a customer, is that just on you, or do you have to go to what they call loan committee, and how does that work?
The leadership of the bank has rightly decided that I don't have any credit authority, so everything goes to somebody else other than me. But a certain threshold would be what's called officers. Actually, a certain threshold would be, me as the officer and the chief lending officer could approve something, and then the next threshold would be what's called officers loan committee, which is basically the chief lending officer, the president of the bank, the head of credit risk management, as well as the officer. We present it and discuss it in a committee setting, and then if something is over the next threshold, it gets approved at officers loan committee, and then it goes to directors loan committee, who can then approve up to their threshold, and then if it's even more than that, it's got to go officers loan committee, directors loan committee, and then the full board of directors.
So it looks like you're all cooperating to make sure the loan is good for the borrower and for you.
Yeah, and I think the knowledge and the information flow goes both ways, because it's very important for our board of directors to know what we're doing in the community. You know, what types of loans that we're doing, who we're dealing with. You know, they're out in the community as well, so it's an invaluable resource to have their input.
Have you ever brought a loan into one of the committees and handed it in and they go,
No.
safe in?
No, before anything gets to a loan committee, it has to be reviewed and approved by the chief lending officer. So he's Pat Kelly.
Yep.
You've met him many times. He's a very experienced banker, and he is kind of well aware of the mood, because he's at every officer's loan committee. He's also at every director's loan committee and board of directors. As an officer, a lending officer, I only go to the committees where I've got something to present.
Got it.
He's at everyone.
Yep.
So he knows what, he's got a better feel for what the board wants to see and what their hot button issues are. So he brings it back to us, and we try to address it in our initial write-up. So by the time he gets to them, all their questions are answered before they even think about answering.
I like this because in my career, I think this is really interesting, because in my career, I can't believe the people that bought buildings from me over the years that should have never bought them. And I think maybe they paid out of their pocket or they got a loan somewhere, and also talk a little bit about all the different banks have different appetites for different kinds of loans.
Yeah, I mean, there's a, kind of a sort of a matrix that every bank has. You know, I've worked, as I gave you a bit of my background, I've worked at very big banks, I've worked at very small banks, and everything in between. And, there's always a, flavor of the day, a preference of the bank. Some banks love real estate as long as there's a mortgage on a piece of property. The rest of it kind of follows. And some bankers are more focused on the cash flow. Some are, I think the most important, the 5 C's of credit, the most important one is the character of the individual that's borrowing, because I've had some loans that, some people that could pay that wouldn't, and some people that everything went bad and they still made sure I was made whole. So it's a matrix. I always say, and it's probably giving myself more credit than is due, but the lending is more of an art than a science. And a lot of people try to boil it down to, what's the debt service coverage ratio? What's the loan to value? Which is important.
Yes.
No doubt about it. But it's kind of how it all fits together and how your financing is tailored to the particular situation. So, I like to think that it's more than just the numbers.
Nicely put, Chad Stewart. Okay, so I think we've come to the time of this interview that we're going to ask you to leave. And not really, not yet. Okay, we have the All-Star Bank recap. Projections for the balance of the baseball season with the focus on the Yankees, Mets, and the Red Sox.
Yeah.
So that's your sideline, I see.
I love that. Yeah, I'm a big-time baseball fan. I'm a fan of baseball, as well as the New York Yankees, the most celebrated franchise in baseball history, and perhaps all of sports history.
George Costanza worked for them.
I heard, yes. He was the assistant to the traveling secretary. We've just passed the All-Star break, which is traditionally the middle of the season. It's a little bit later than the middle now, but the trade deadline has been moved up from August to July 31st. So a lot of teams have to figure out whether they're buyers or sellers at this point. So also they've expanded the playoffs. There's 2 extra wild card teams in baseball, so there are more teams that are theoretically in the hunt for the postseason. So that makes it a little bit more tricky as to which players are available for trade. So Yankees desperately need a third baseman and probably a pitcher or 2. The Red Sox have been playing unbelievable ball. The Red Sox are actually run by a Connecticut kid from Connecticut, Trumbull, Connecticut, Craig Breslow, who pitched for the Red Sox, but played soccer, and it was also, like I said, a baseball player. His father was a soccer coach in Trumbull. So the local kid is running the Red Sox, and what they've done is been pretty incredible because basically they did addition by subtraction, and they traded away their best player by any standard, Rafael Devers, and by removing him from the team, and he had some issues with not wanting to play third base and then not wanting to play first base, and then
What does he want to play? What's his preferred?
I think he wanted to cash his check every game checks, and I don't think he was a great influence on his teammates. And by removing him from the mix, the team immediately tanked, and they did very poorly for a period of time. But they've since rebounded, won 10 in a row, and are playing some really great, inspired baseball. So
Coaching, good coaching. Harmony.
I guess so. And
Mets.
yeah, the Mets also, the Mets and the Yankees kind of hit the skid at the same time, and they're kind of rebounding at the same time. So the Mets stole the Yankees, one of their best players last year in Juan Soto. And, Soto at the beginning of the year kind of pouted and didn't fit in and, wasn't playing well. And suddenly he's become one of the most feared hitter in the National League, which is his normal place. So, the Mets have all the money in the world. Steve Cohen is the richest owner.
Yes, hedge fund guy.
Yeah, hedge fund guy. He's probably made more money during the time we've recorded this podcast than he could spend on the baseball team.
Well, you should have your secretary email this podcast because you might become an analyst on the radio station over there.
They could spend their money worse than to hire me.
And you could look at his loans too. Just say, "You doing this right, Steve?" You made a comment about the Red Sox. I like Brad Keselowski. He's driving the 6 car from Roush Fenway Racing in NASCAR, and they have 3 cars at NASCAR. So there's your Red Sox connection with NASCAR.
Dude, just to kind of tie a bow on it, Red Lime Rock Race Track up in upstate Connecticut recently had its first NASCAR race there.
Craftsman Truck Series.
Yeah, the truck series up there, and I've developed a nice relationship with the ownership and the management up there, and it's tremendous for the state of Connecticut because if you look around, there's very little pro sports, right? What do we have? We have the Travelers Golf Tournament, one of the best tournaments in the country that is played here. And we have women's basketball at the Mohegan Sun, but other than that, there's not much. So adding NASCAR to the mix, kind of makes Connecticut more of a professional state, which I think we should be for professional sports. We're right in the nexus of New York and Boston. We've got a strong sports-loving population here, and hopefully NASCAR will come back again to Lime Rock. From what I've heard, they had a great time.
I think we had about 20,000 people. I spent 13 years on the PA there, and when the new group led by Dickie Regal bought it out 3 years ago, we probably had a part on creative differences, but Skip Barber did a heck of a job there. He's retained, I think, 14% of the business, and he always did a fantastic job there, and IndyCar wanted to come there. And do you know why they didn't come?
Because Tom Hill wasn't on the mic?
No. Lime Rock, no, they bring their own announcers. But with that said, Lime Rock could not provide 40,000 hotel rooms. And a lot of these big sports need the hotel rooms. But the Craftsman Truck Series was at the 3rd level of NASCAR, and they fit the NASCAR track and the economy and who could stay there and how far the hotel rooms were away. I know there's talk that they could handle an Xfinity or a Cup race, but that's going to be about hotel rooms and seats. Lime Rock has no seats, but it's a wicked interesting dynamic, and I'm thrilled that you brought it up. It just shows to the audience the wide diversity that this anchor banker from Ives has. So you have a minute or two to say goodbye, and then I'll close it up.
Wonderful. Well, you didn't give me any chance to ask you any questions, Tom. I'm actually fascinated. We talked a little bit before the mics were on about your various careers. How did you end up in real estate? You had a passion for cars and racing prior to becoming a real estate maven. Can you walk us through?
Sure, gladly. I started out in the car business at about 13 with Cole Auto Sales up on North Main Street. My high school buddy would take me there every day, and I learned to go to the Northway Auto Auction when I was 13. Learned how to prep cars, recondition them, fix them, etc., drive them before my license. And then my father sponsored my dealer plates when I was 19, and I went into the car business. And I was the oldest of 7 kids, 5 boys, 2 girls. And so in the car business, as I grew, each kid came out of high school, and even during high school, they'd work at the shop. And eventually grew it into car sales, wholesale retail, mechanic, full-blown body shop, and full-blown towing service because we had so many brothers. And eventually we learned that inside storage paid twice as much. This is banker economics. Inside storage paid twice as much as outside storage. And I rented a huge old derelict mill building called French's Mill of 400,000 feet on the Robinwood side of Robin Street in Waterbury off of West Main. And the owner happened to be a major developer, Norm Drubner, who had bought it for nothing because it was derelict. And it was sitting there, and I needed a place to put cars inside because at that time we had 5 wreckers, 2 flatbeds, and we all knew how to drive a wrecker, but I was better inside answering the phone and getting the business and wearing a tie. And my brothers were artists at operating the tow trucks, especially in towing and recovery. And we got the shop and rented the factory from Norm. And one day he brought a team up of 25 outside attorneys, engineers, architects, appraisers, and bankers. And when they came to walk through the building, on the 200,000-foot side, we had about 400 cars inside. And on the upper level at grade, we had another 100 up there. And as they were walking through the factory, back when the insurance companies had a place called New England Recovery that would come in with their flatbeds and claim all the wrecked cars, the traffic of our wreckers coming in, other wreckers, and all the recovery